Hi fellow traders, I'm making this video to share my EUR USD analysis with you. My last trade was a buy trade, something around 1835. After this upswing was started, and then I was waiting for 30% retracement, and 1835 was triggered. Market then continued to the upside, trade ran into the profit of almost like 30 pips floating, but then market started going down, and when RSI touched back downside to 50 level, I closed the trade at the break-even point. Right at kind of like 0.1 or 0.2 pips above 1835 because I had set my TP right at the break-even. Sorry, I had moved my SL to the break-even. So then market kept falling to the downside, and then it started moving in a range. So I marked this range by this I mean, not I, because that was done already in a sensation when I did not trade. But yeah, there was an instruction to my colleagues that if RSI comes back downside to the 50, the buy trade must be closed. So that was closed, and then market started going to the sideways, and then it tried going up in Asian session, then fell down in the London session, then again tried going up in the New York session, and I watched this whole development in my working time, because I work in London and New York session. But this whole thing made a kind of sideways market for almost like 37 hours, and then I was waiting for the breakout of this sideways rectangle to enter position, and right after market broke this rectangle and closed well below the rectangle, I took a sell position right here at 1795. So if you haven't taken your sell position at 1795, market is a little far from this point, 11 pips. So what you can do is you can place your sell limit at 1795. Market may hit your sell limit in upcoming hours. So that's all about my sell entry, but this is not one factor for taking the sell entry. I mean, this rectangle alone is not the factor for taking sell entry, or this moving average crossover to the downside, or this RSI crossover to the downside. These factors are not just the factors which I took into my account to take the sell position. I looked at the bigger picture on 4-hour time frame before I decided this. So if we look at the 4-hour time frame, and if you remember my last two videos, you remember there was a three drive pattern, like first drive, it was a first drive retracement, second drive retracement, third drive, and then we had taken sell position, succeeded. Then here I took buy position, closed at the break even. So the point I'm trying to make here is, if you remember this whole development from here, this whole movement from this point to this point, that was a three drive, will now be considered a single leg, or you can say a single drive from A to B, and then it will be considered the capital B to capital C retracement, and then from capital C to this capital D. So this will be a B, C, D movement, and this ABCD was completed as per 127.2% of BC. I always say that the CD can be measured either as per AB or as per BC. So when we measure as per BC, it generally be 127.2% of BC. If we measure as per AB, it can be equal to AB, that is called AB equals CD, or it can be 61.8% of AB. So basically the point I'm trying to make here, it was completed, and then this was the retracement, and from this point it could be a continuation where I had taken the buy position that was closed at the break-even point, but it couldn't continue, and then it started falling. And now we have a probability of this formation of this Gartley. You can see I marked this Gartley, shaded this Gartley, and then it can be something like the C can be the small x, D can be the small a, so it can be X, A, B, C, D Gartley. Sorry, I forgot to mark this point as the C. So let me mark this as the C, small c. Alright, so it can be A, B, X, A, B, C, D Gartley, and there is high chance that the D point will be completed at 161.8% of this small b, C which is making a confluence support with the 78.6% retracement of x small xa. And because this whole development from this point small a or capital D to small d is equal to its previous movement. For example, look at this previous retracement. It's going to be harmonic just like this. So if we see the harmony, it can be similar retracement, and then there can be a bigger picture of another way bigger 3 drive, where this whole development from point A to point B can be one drive, B to CD, capital B to capital C, the retracement, capital C to capital D, the second drive, and from capital D or small a to this small d, the retracement, second retracement, and then there can be a new drive, the whole new drive to the upside, and then it can be a bigger 3 drive from A, B, then from C, D, and from this point, and then it can be a new drive, because this is already, you know, mathematically correct. Because if we just assume that the market is going to fall to this level and then market is going to, you know, continue to the upside from this level, our mathematical criteria has already been, you know, sufficed by the second drive. Because, you know, CD is second drive, and CD is already 127.2% of the BC, and you already know that the every drive in a third drive is either 161.8% or 127.2% of its previous drive. So this is a kind of assumption, because I know I'm now thinking of a downward move, then then I'm assuming the market to, you know, return back to the upside from here. So this will be a scenario of, you know, upcoming days. Right now I'm not talking about placing a buy limit at the point D and taking the buy position at point D. We'll see first whether or not price is going to touch the point D, and then it's gonna continue to the upside or not. That can be a next trade. But right now the whole picture is very harmonic, and I have taken my sell position, and instead of you know, taking my TP at the nearest support, that is here, I have taken my TP, I have set my TP at 161.8% of this small BC. So at least this Gartley is going to be completed, and this movement of retracement from this point to this point is going to be equal to the capital BC. So that's why I've set my TP something around this area, and my SL and TP in this trade, in the sell trade, is from 1795. So let's calculate from 1795. My TP is 56 pips. Since this is a sell trade, so our TP must be at the ask price. So my ask price is 1 pip above this point, so it is not 57.5 to be precise, it is 56.5 pip TP, and SL right above this this high. So this high, so it's 44 plus spread, because SL should also be placed at the ask price. So this is 45 pips risk and 55 pips reward. Since reward is bigger, I took this position. I had already measured risk reward, and then I had taken the position. So that's all. You can enter the sell position if you get the chance to chance of, you know, getting your sell limit triggered. So you can set sell limit at 1795, and then let's see what happens. Let's see if market comes here or not. So that's all about this EUR USD analysis. Thank you for watching.